This Headlines and Markets Update is brought to you by BNN, the Business News Network.
So what do the federal government's tightening of mortgage rules mean to your plans to buy a home? Joining me now with some mortgage planning tips is Ranjit Dhaliwal, mortgage broker at Mortgage Intelligence. Ranjit, great to see you again. First of all, your take on the move today. Were you surprised?
I think everyone was surprised that it happened all of a sudden, and there's some pretty drastic moves in there as well.
A couple, because we've got the government reducing the amortization and the home equity side, but we also saw this announcement out of OSFI even focusing more on the home equity, the amount of equity you need in a house at about, I think it's 60%. How do those new rules change for the availability of mortgage debt?
It restricts it quite a bit, obviously, and as you said correctly, OSFI is looking at reducing the home equity lines of credits down to about 65% from the current level of 80%, and at some point in time we actually had up to 90% equity available through home lines of credit, and so that's being reduced. And furthermore, you've got these tightening of the actual mortgage rules, where not only the amortization is coming down from 30 years down to 25 years, you've got total debt servicing ratios coming down as well, from a 44% down to 39%. So all of this stuff is going to obviously tighten the household budget quite a bit, and it'll make it difficult for people to buy new homes. So obviously it is going to tighten everything up.
Is there a single component here that will have the biggest impact? Is it the amortization? Is it the 80 down to 65%? What for you would be the thing that a family should focus on the most when they look at these particular measures?
Well, first of all, Marty, I think we should clarify that the 80 down to 65 hasn't occurred in this particular announcement
proposal,
yet, right?
Yeah.
It is proposed, right? But the biggest impact, it's actually both of them, the amortization down to 25 years. I think that's going to have an impact of about $500. It's going to require an extra $400 or $500 of monthly income to afford the same type of a mortgage. And same thing with the total debt servicing ratios coming down. Actually, I was just doing some calculations while we're waiting here, and the impact is those two rule changes. The impact is about $1,000 on a monthly income. So you need $1,000 more income in order to qualify for the same $350,000 mortgage under the new rules, and compared to the old rules, basically.
And so what percentage, if you can extrapolate it, is it going to take 10% of home buyers out of the market, do you think, or is it a much smaller number?
That's a really good question. I don't have the exact answer to that, but it's clearly going to take some of those marginal borrowers off the market completely. They're not going to be able to qualify for the home that they're looking for, or they're going to have to adjust their price quite a bit, and that price adjustment is going to be quite drastic, actually. The income adjustment, I told you, is only $1,000 on a monthly basis. Not only, that's actually that's quite a bit.
Lot of money, yes.
And but it'll have a very huge impact on the ultimate price for that particular individual or that family can actually afford.
And what about the $1 million, the lack of insurance on mortgages above $1 million?
I don't think there was a lot of insurance on mortgages above $1 million, so I don't think that's going to have a drastic impact, a huge impact. As Flaherty said, he doesn't really care about the wealthy households, but really I don't think that's going to be huge, as much as those other two components that we talked about.
Okay, so what are your suggestions to potential home buyers right now? What should they be doing? It'll be on the news. We've broken it here. It's going to be in headlines. It's going to be on the net. What should potential home buyers be doing today?
Oh, anybody that's currently in an agreement to purchase a home, which is closing whenever, let's say a month from now, 2 months from now, they should actually get their mortgage approved, fully approved. Get the contract, sign it and all, and they can still qualify under the old rules all the way up until July 9th. So if you've got a purchase agreement in hand, a full contract, and you've got a mortgage contract, mortgage commitment, then you're okay. You're protected under the old rules. Otherwise, obviously you're going to have to qualify under the new rules. And in this particular time, they said that you must have signed a purchase agreement, and you must have an actual full mortgage commitment by the 9th in order for for you to be grandfathered in the old rules. So the suggestion is anybody that's actually purchased a home is to go out there and get your mortgage approved. And right now is actually a great time to get a mortgage because the 5-year fixed rates are at like an all-time low. Right now, through a mortgage broker, you can get a 5-year fixed rate as low as 2.99% essentially.
And how do you think this is all going? I mean, ultimately, the effect is to cool down the housing market, obviously also to save people from themselves to some extent.
Yes.
What impact do you think it's going to have on the housing market?
Well, it is certainly going to cool down the prices of the houses. It's going to cool down. We're going to probably stop seeing all these multiple offers
that everybody talks about.
And that's difficult to say. Now, these two changes are quite drastic changes, I believe, compared to all the changes that they've done over the last 3 years. And so it's certainly going to slow it down, definitely. We're probably going to stop seeing those multiple offers. But time will tell. We'll see pretty shortly, actually, within the next month or so to see what's happening in the marketplace.
I just have one last question. One of the recommendations of OSFI is to be more diligent in how they review borrowers, but also to go out and look at the properties. Is that not something that's kind of regularly done? If you're going to put a mortgage on a house, when you want to make sure that that house is there?
That's a really good question because at one point I think there was a lender that ended up giving a mortgage to a parking lot downtown Toronto. They didn't know that there was not an actual, not as valuable as an actual home or a condo. But certainly it's going to change things, definitely.
Okay.
Yeah.
Okay.
Yeah.
Ranjit, thank you very much for coming in.
Absolutely, it's been a pleasure.
We're joined by Ranjit Dhaliwal, mortgage broker at Mortgage Intelligence.
Now, coming up, we've got a busy concert season, music in the air, driving revenues higher in the Canadian music industry. We have the business of music in our continuing coverage. That is coming up right after the break.